let's get straight to what's happening with your net interest margins, because they came down a little bit. What's the culprit behind that, and what's the outlook for the rest of the year?
Yeah, look, I think, Yusuf, on NIMs, there's two factors driving it, really. One was that we repaid our bond program at the end of June. So we were actually carrying quite a lot of excess liquidity for the last couple of months of the quarter. So that had some impact on NIM. The other main one really is that we have continually in the last 4 years really been sort of gradually changing the loan mix. And the whole approach really is to rebalance the portfolio and take a little bit of risk out of the book and basically balance things up. So I think NIMs will continue to decline a little bit. As I said, they were adversely affected by this sort of excess liquidity we were carrying in the second quarter. But you will see them continue to graduate down probably over the next couple of years, actually.
Peter, it's Tracy Alloway in Hong Kong. It's so good to talk to you again. You mentioned the loan mix there in your overall portfolio, and we have seen some analysts, some investors expressing some concern over loan quality in the U.A.E. region. I'm curious if you could maybe give us some color on what you're seeing in terms of bad loans. What are the trouble spots right now? Last time we had a big default cycle in the U.A.E., it was mostly SME lending. Are you seeing that again, or is there more of an issue with real estate lending, for instance?
Yeah, look, I think, Tracy, for us, I mean, we are the largest SME bank in the country, and we struggled, to be very frank, sort of 4 or 5 years ago with big SME defaults or a lot of SME defaults. So what we've actually seen over the last 3.5 years really is gradual improvement rather than things going in the wrong direction. So on the SME side, we're actually seeing improving asset quality. I think part of that is because we changed the way we lend quite significantly about 4 years ago, and the benefits of that are really starting to come through. In our case, across the board, again, because of the mix, I mean, we're doing a lot more financial institutions lending and wholesale banking lending, where we're not seeing any real signs of stress. I think in the longer term, real estate, if we continue to see this downward pressure on prices, you would assume that could start to bring some challenges through. But in our case, we're probably in a slightly different space because of our loan mix. And as I said, all we're seeing is really, just gradually improving asset quality rather than the other way around.
Peter, the Fed is expected to cut at the end of the month. At the end of the day, a cut's a cut. How is that likely to affect you?
Well, interestingly, again, RAK Bank seems to be in a different space to most banks in most areas, and it's the same when it comes to interest rates. Globally, generally speaking, banks benefit when interest rates rise. In our case, we benefit marginally when interest rates fall or are flat, and that's simply because a very large portion of our loan book is at either fixed rates contractually or fixed rate by practice. Things like credit cards, personal loans, auto loans, and so forth are largely fixed rate for the period that they've been written for. So in our case, we generally do a little bit better when interest rates fall. I think it's fair to say globally most banks would find the reverse, that they tend to do a little bit better when interest rates rise. So in our case, I don't see it as an issue. In fact, we're quite thankful that this pause on rates has happened and some declines, because not only from a NIM perspective but also from a perspective of asset quality. I mean, I think if rates had continued to rise, it would become increasingly difficult for clients, and that would flow through into impairments.
So, Peter, I'm curious, how would you expect those lower rates to actually feed into loan growth? Because I believe you forecast something like 3 to 4% loan growth for the full year. I think you said that back in April. Do you think you're going to be able to meet that forecast? Do you think that maybe lower benchmark rates will encourage more businesses to take out loans?
Yeah, look, I think it's yes and no. I mean, I think the thing is it probably won't discourage, and certainly when rates were heading upwards, I think people were starting to be a lot more cautious in terms of borrowing money. And that's not a bad thing, but obviously with the expectations that rates would remain flat for some time or potentially come down for some time, it may improve loan growth a little bit. I mean, our numbers are a little bit, not misleading exactly, but we have a relatively large financial institutions book that we built up over the last 3 or 4 years, which is actually not shown in our gross loan numbers. We number called gross customer assets.
Yeah.
And that's grown about 3.1% for the year. And I think that's sort of added to, in our case, that is the loan growth is a little bit higher than what you see in the pure gross loans and advances.
Peter, M&A has been a big theme in the United Arab Emirates. Are you currently looking into either being acquired, making an acquisition, or being part of a merger?
No, yes, that's the way I think things will probably pan out, and it's not uncommon. I'm actually sitting in Australia as we do this interview. It just happens that there's 4 very large banks in this country and a number of niche players, and I think that's the way things are going to pan out in the U.A.E. That you'll end up with 4, 5, maybe 6 relatively large players, and some players that have a niche. And I think in the case of RAK Bank, I mean, not only are we the National Bank of Ras Al Khaimah, which of course has relevance, but we also are the largest small business bank in the country, and I think that's really our niche play is in the SME space, and obviously to support the ongoing growth of the RAK economy as well. So no, at this stage, there's nothing on the table. We always monitor and look at these situations, but there's certainly nothing that's